What up, though, everybody? Welcome to Mobile Money Academy, and in this video, I'm gonna be showing you the 6 confirmations that I use to enter a trade. With these 6 confirmations that I use, if you use them, 9 times out of 10, you will win any trade that you enter. And that's with stocks, foreign exchange, and also cryptocurrency. Using this strategy is how I've been successful in winning all my trades. So without any further ado, let's get into it. Now, this first screen that you see is detailing what is forex, what it is that you're looking at. I know a lot of y'all be seeing me posting up these charts and posting up, the market, and you see the buy, sell, and the shorts, and you see I'm making money, but you just lost and you don't know what it is that you're looking at. So without making this video too long, and I'm trying to keep it short as possible, I'm gonna go into what it is as much as I can without spending a lot of time. So this screen you're looking at, it explains what is forex. What is it? The foreign exchange market, which is usually known as forex or FX, is the largest financial market in the world. Why it exists? Different countries have different currencies, and the forex market makes it easy to exchange them. Companies need to do business in other countries and need to convert the currencies. Forex is a money market. Money is the object that is traded. When you buy a currency, you buy a share in that country's economy using another country's currency. So we'll get into that. You'll see the USD euro pair. You'll see the New Zealand dollar, Japanese yen pair. That's what you'll see. The exchange rate of a currency versus other currencies is a reflection of the country's economic condition compared to the other country. So that's the exchange rate, and you'll be seeing that when I go into the other screen. A global decentralized market for the trading of currencies. That's what basically the forex market is. It's basically allowing you to trade currencies, trade different pairs of currencies, and you are able to capitalize off the difference in each currency. Just a second, let me put on my do not disturb. Where is it? Okay, cool, because we don't want no interruptions. How big is the forex market? And it shows you right here at the right here. Forex is the largest market. Right here is the New York Stock Exchange. Right there is the Tokyo Stock Exchange, and right here is the London Stock Exchange. So you can see how much bigger this market is in daily volumes compared to these markets. So that's why I trade forex rather than stocks, and we don't trade Tokyo businesses or European businesses. But this is why I trade forex, because it's the largest in value. That it's the largest in value, so it allows you to make more money in a shorter amount of time trading forex. So that's what forex is in a nutshell, and I'll try to explain more as we go on. But let's continue. The 6 confirmations that I'm gonna be going into is showing you what the shark fin is on my TDI, showing you what divergence is, and the trade that I'm in right now will be showing you the low of the day or the high of the day. Might not be able to get into patterns, but instead of head and shoulders, I'll be showing you the M's and W's as far as patterns. I'll be showing you the previous levels of rise or fall, and then I'll be showing you the sell zones. So with all these and it's a couple more, which is either you're in an uptrend or a downtrend, and one of the keys to this forex is the trend is your friend. So that's what we'll be going into, and that's the confirmations that I'm talking about. So to recap, I'll show you what the shark fin is. Then after you see what the shark fin is or confirm a shark fin, you'll be looking for divergence. Then you'll be looking for the high of the day or the low of the day. And that would be confirmed by a W forming if you're placing a buy, or a M forming if you're placing a sell. And then the previous levels of rise, and then the sell zones. Then I'll be showing you the time frames is also a confirmation too. And then, like I said before, either uptrends or downtrends. And using those confirmations will more than likely make you have a successful trade, enter into a successful trade. So let's get into the chart. Now this is the trade I'm in. What we're trading right now, as you remember earlier, is the currencies, and you will see that right there. That shows you the currency. Right now, I'm trading the New Zealand dollar. You see NZD, JPY. That's New Zealand dollar, right? Japanese yen. So that's what we're trading. That's what I'm trading right now. You can go into with these 3 lines right here, or you can go right here on this dollar sign, and that'll show you the pairs. So just to go in real quick, this is another pair. This is the Australian dollar, the first one, Australian dollar against the US dollar. Second one, the euro against the United States dollar. Third one below that is Great British pound versus or against the US dollar. Then this one is United States dollar, Swiss franc, New Zealand dollar versus US dollar, US dollar versus Canadian dollar, US dollar versus Japanese yen, and so on and so forth. So that's give you a little info on the pairs. Okay, so got you, now you know what that is, and what you're trading, and what this chart is showing you is the difference between the two currencies. This is going down. So this basically saying that the New Zealand dollar, the price of it would be right here. And as this 15 minutes, as the time went on, the difference between those pairs went down. So basically, in each one of these candles, you squeeze in, each one of these lines represent 15 minutes in time. 15 minutes. So every bar equal 15 minutes. So in a nutshell, basically what it's saying is, since August 19th, right, the price of the New Zealand dollar, or let's see, yeah, price of the New Zealand dollar went down against the United States dollar, or Japanese yen, at August 20th. So within one day from, well, August 21st about to be. So within one day, the difference between the New Zealand dollar and the Japanese yen, it went down. It went down to this price. So I hope that makes sense. Hope that makes sense. You really trading the difference. That would be like saying the price of Gorilla Glue versus the price of what, Kim Dog. It went lower. It went lower. The price of the Gorilla Glue went lower because, I don't know, something might have happened. People might have found out that the Gorilla Glue that Homeboy was selling didn't come from California. So that news popped off, and people was like, cuz I'm not paying you $69, for no Gorilla Glue that didn't come from California. So when the word got out, you was like, bro, I'll pay you $68 since I know it came from Colorado. And basically, in a nutshell, that's what you are capitalizing off of. You capitalizing off the fact that you knew that this Gorilla Glue didn't come from California. So you was like, man, I don't know that I'm going to wind up getting it cheaper because I know it came from Colorado. So I'm banking on the price of it going down. And you capitalized off that. So hope that makes sense. Hate to use weed as an example in this stuff, but where we from, probably get it now or have a better understanding. But basically all you doing is capitalizing off of the trends. It going down or up. So I hope that makes sense. All right, so now you know what the currencies is. You know that each of these bars, every bar represents 15 minutes in time. And you know that you're trying to capitalize off the difference in the currency from the time frames or the dates. So go further into it. Let's go with the shark fin on the TDI. Erase that. Man, it's already 15 minutes. Dang. Okay. The shark fin. The shark fin. See if we can find a good one. The shark fin will be right here. That's a shark fin. Shark fin, you see the TDI. This whole thing. This indicator right here is called a TDI. See the sell zone and buy zone. All right. In between these blue lines is what you're looking for. And then when you see this green line right there coming out of those blue lines, that's what's called a shark fin. All right. Okay, so see the blue line right there, blue lines, right? And that you see this coming up out of there, that's a shark fin. If you look and see what happened when you saw the shark fin, right, and price went down. Okay, so that's one confirmation that you know that price is going down. So what you would do if you've seen a shark fin, then you would place an order to capitalize off of that. So you place a sale because when you know that the price is going down, you're placing a sale limit. So you'd be right here. You see the shark fin, and you would say, it's going down from there. So you would place an order right there at that price, because that would be an indication that it's going down. All right. So you would correlate that to the price. You would place an order. See, 69630. So you would place a sale limit, and you will put that price in there, 69630. Okay, boom. Then your order is open. All right. So now you see sale limit right there with your order being placed right there. So if you was to see that shark fin, and that's, like I said, that's one of the confirmations. If you're seeing that shark fin right there, and just say you was right here when you saw it, right? Because remember, each candle or each bar represents 15 minutes in time, right? So you're seeing this one, and you're seeing that shark fin right there. Boom. So you would be anticipating for price to go down. So you would set your order right there, and as you can see, price went down. Boom. So that's one indicator that it's going to go that your anticipated way. So now that's the shark fin. Bearish divergence. Bearish divergence is when you see This is divergence, and it's showing you two things right here: the low of the day, right? You looking for W's on buys, and see if we can find more M's on sale. All right. Okay. But for this example, this would be a W. Okay. And divergence is when you seeing, that's divergence. Okay. When you see a W, right? And you see that on the chart, this W it's going down right here. Let's make that more clear. From this point and this point, it's going down. That W, it's going down right there. The line right there. Okay. But on your indicator, it's going up. That's divergence. Now, I'm hoping I'm explaining that clearly to where you can understand. See this W, right? You see that boom. And you see it's going this way, right? But on your indicator right here, you see the same W, but it's going up. That's divergence. See that? Hope you can see that. Same W. But from this point and that point is lower. But on this point and that point is higher. That lets you know that the market is about to go up on the W. So that's your second confirmation when you see that indicator. And you can also see, let me erase that. You can also see a shark fin, a slight shark fin coming up out of there. So that would be your confirmation. Also, these dotted lines represent a day in the market. Okay, so this would be a shark fin with divergence, right, at the low of the day. Okay, this is another day. See this would, and erased it. But these dotted lines represent a day. Okay, so this will be the low of the day right here. And you can also see W's. If you look for these patterns, you can see that all it is in the market is M's and W's. M's and W's. So that's what you're looking for. So that's divergence. Now, the hardest thing to do is find all 6 of these in one, you know. To find all 6 of these is like a golden, if you can, you find all six of them, then you know to place money on this trade. And I wish that I made some room here so I could actually be able to show you. You would see the shark fin right there, or in my TDI sell zone, you'll be able to see that was at the high of the day. If this smiley face wasn't there, you'll be able to see, the levels of rise. If it was, if this wasn't just a screenshot, but this was like a perfect trade. And if I had time, or if I do have time, maybe I'll go back into U Chief, and then you can look at October 25th through the 28th, and then the 30th, and you'll be able to see that it just dropped. And I probably made a lot of money on this trade. But if you do, and then you're not going to be looking at the charts all day, every day. But if you do get on the chart and you see this stuff forming, then that's like a golden trade. And you're going to make some bread if you are able to capitalize off those confirmations right there. So that's that. Let's go back. Let's see if I can get you a more clear. We can go right here, and sometimes you won't get the divergence. You see divergence, and then after the shark fin right there, price just went down, but you do get an M, and it just went down, down, down afterwards. So sometime, and high of the day, this was at the high of the day. Like I said, these dotted lines represent one day. And you can see the W. You look closer. So those things are what you want to look for when entering the trade. Also, you seen that in the shark fin, it was at the sell zone. So that was another indicator that this thing was about to drop. And you got to be in it to win it. So right here, when you seen that, and you seen the M forming, it would have been, or you seen it was at the high of the day, you would have placed just your order at this one right there, 74.15. Oh, boom. Sell limit 74. 74. That was 74.50. So you place your sell. $4.50. Okay. And then you would have been able to capitalize off of it being a sale. And I'm sorry, my bad. Well, yeah, that was right. Would have been a sale right there. Okay. Now, the trend. Seeing the trend is always your friend. And you will be able to see that right now. When I first entered this trade, I was up $100 some odd. And because I went against the trend, I placed a buy. See, this is a buy. And you can see that price is going downwards. So the trend is your friend. So basically, the best thing that I could have done would have been to place a sale. And I'm going to show you that right now. Pressing on these, and these are called time frames. You got the 15-minute, the 30, the hour, the 4-hour, the day, the week, and the month. Okay, so going into the hour, if you see that price is higher here and lower there, then you know you in a downtrend. So you should be looking for sales. Okay. See it, looking at it again. You also see an M. But if you scroll into a chart and you see prices higher here and lower there, that lets you know that you in a downtrend and you should be looking for sales. Okay. Sales. Sales. Because why? You can anticipate the market going down, and it always does what it do. All right. If you go into a higher time frame, you see the same thing. Sales. All right. Higher time frame. Now, you can, same thing right here. Downtrend. That's a downtrend. The trend is your friend. So, if you in a downtrend, you want to be placing sales. Okay? Now, you see right here, it goes up a little bit, right? Goes up a little bit. But that's all just for you to wait. You have to, you have to be patient and wait. It's not a time to enter no trades, because why? You're in a downtrend, and the trend is your friend. All right. So boom. This trade earlier, I entered when I seen it was in the buy zone down here, right? I seen it was a W forming, right? Also seen the shark fin, right? And I seen that it was at the low of the day. Okay, so I entered that trade. And I seen the W, and I entered. The W hadn't formed yet, but I seen that it was going to form, and it rose to right here. Now, when price was right here, this very same trade was at $200. And I'm not concerned or anything, because I know what I'm doing, and I know I'll be, making money. I make my money. So I'm not concerned, and I really wanted to just do this to show for this video. So, you can close this order. I closed it, and you'll see that my balance is up. All right. And you see that my balance profited $38 off of this trade. Now, if I had closed it earlier when it was at the high of the day, right, then I would have been up $200. But like I said, I'm not concerned. I do this. I can trade. I can place sales in a downtrend, and I know what to look for, so I can place buys in a downtrend. So I'm not concerned. I can trade both ways. I can make money both ways. And yeah, that's basically it. Try to see if I'm recap. You got your M's you're looking for. Okay, so just say you're seeing the chart right there, and you see it's in a sell zone already. And you wanted to enter the trade based off it being in the sell zone, and you're seeing it at the high of the day. This is what you can do. Squeeze out. Let's see where is that? Right here. Okay. And you see that price, because it only show you so far, right? So let's just say it was right here. I'll see it's in the sell zone, and I'm already looking to see that it's been rising. All right, it's been rising for a couple of days, and I'm looking for the sell, right? Always looking for the sell in the downtrend. You see price right there. Then to capitalize off of that, when you see the confirmations that you need to see, you see price will be right there. You will place your order, your sell right here, right there at that price, because you anticipating for it to go down, right? So you will place that right there at that number, 70,010. So you come to it, go to your, and to get to the order screen, I'm pressing this right here, this plus sign with the paper. To get to that screen, I'm pressing that. If you can't tell what I was pressing, the paper sign with the plus, that's how you place the order. So I pressed that, place my sell, and the price was 70,010. And I would place that. And then when I go into my chart, you will see it. So boom, I'm anticipating for the market to go down for a sale. And as you can see, that's what it do. Boom. Now from August 19th to August 20th, if I placed a sell and it went down this further on a standard lot, which means I get $1 for every pip that it goes down. You're looking at about close to $500-$600. And for what I was doing, working, you had to work 40 hours a week or more. At well, definitely you have to work 80 hours a week with taxes. Yeah, about 60 to 70 hours a week at about $12 an hour to be able to get $600. And with this, and this is why I chose forex, is I'll be making this within a couple of days, in a day. So yeah, I'd rather look for these 6 confirmations than look for a job, apply for a job, go get the job, see who hiring, and put in the application, then call them back, and then get prepared to go to work. So I'd rather look for these 6 things rather than to do those 6 things and still be at home and make the money way less time. You're talking about from Friday, then you gotta wait 2 weeks for them to pay you. So yeah, just giving that whole week right there from August 17th. It ain't even August 17th, but let's see, you gotta go whole 7 days for them to pay you $600, working 40 hours. And yeah, I'm cool on that. I can make that in 2 days. Just prep, doing what I'm telling you right here, right now. So, and like I said, that's the 6 confirmations that I use to enter a trade. And like I said, you rarely gonna find all 6 of them in one to enter a trade. Probably gonna find, 3, 4, shark fin, M Foreman, sell zone, high of the day, divergence. You might find 3, 4 of them. Well, if you do find 6 of them, then that's a big trade, and that's worth putting some lot sizes on it. Because you can lose money. Like you say, you scared to lose money, then don't enter forex. If you're scared to lose money, then don't enter this forex, because you will lose money sometimes. But if you use proper risk management, which I'll probably go into on another video, if you use proper risk management, you won't lose that much money, and you will make way more money than you lose in forex. You will make way more money than you can potentially lose in forex. And like I said, if you use these 6 confirmations when trading and be patient and wait until those confirmations come and you see them till you enter a trade, the likelihood of you losing a trade will be slim to none. So, that explains that. Gonna make some more videos in the future, and that'll involve risk management, so you don't lose, how much you can lose, how much you can make, lot sizes, and be going in more and more and more about everything that I know. I don't know it all, but I know what I know. So that's gonna end it for this section of Mobile Money Academy. This was the 6 confirmations that I use to enter a trade. And like I said, I'm not no financial advisor. I'm just showing you what I do. And if you choose to follow what I do, then good for you. Thank y'all. Have a good night, good day, and be blessed. and let's get this money. Peace.